Well, hello there. This is Bruce at Fleet Capital Management. It is Friday afternoon, the 16th of August, 2024. The market has just closed. Man, it's been a wild couple of weeks. I'll show you that on the charts. A number of things to show you, so bear with me, but I'll go as quickly as I can. We always need to say the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I am always available to you, Bruce at Fleet Capital Management. Our website is fleetcapitalmanagement.com. Lots of good information in here, but the front page has two buttons on it. The first one takes you to the most recent videos, and the second one takes you to my calendar so we can do a video call together. I've shown you this for the last couple of weeks, but I am going to show you something interesting on the VIX again. Remember that I said on the VIX, which is the fear index, the volatility index, anything over 20 is considered pretty risky and has an annualized return of negative 36.7%. Between about 17 and 20 is what I would call a caution zone, but it does produce decent returns. Below 17 produces the best returns. Keep that in mind, put a pin in it. We'll come back to that. I saw an analysis recently that for some reason I was just fascinated by. This is an analysis of the frequency of negative returns. And if you're looking at daily returns, 45.4% of all days are negative. And I found that very, very interesting. And this is going back let's see, returns based starting in 1926, so a fairly long time. So that's daily. So, one day it's up, one day it's down. If you look at weekly returns, 42.5% of weeks are negative. So less than 50%, but still pretty interesting. Monthly returns, if you just look at month over month, about a third of the monthly returns are negative. And if you look at annual returns, about 26%, just over a quarter. And like I've said, we generally see bear markets about every 4 years, and this would kind of correlate with that. So when you look at your weekly return stats that you get from Blue Leaf, those actually come from Blue Leaf, not from me. Just remember, if you've got a down week or a down couple of weeks or even a down month, it's normal. This is part of very long-term uptrends. The market basically goes up over long periods of time, but there's a lot of negativity built in within those uptrends. And again, I don't know if you find that interesting, but I was fascinated when I read this. I've always told you the importance of being, when I pick stocks, I also want to pick stocks that are in industries that are doing strong, because an individual stock usually doesn't do that well if its industry is not doing well. And this is Zacks, which I use, ranks industries. And when you choose, now this is not stock selection, this is just looking at the industries, but the top 50% of ranked industries versus the bottom 50% of industries. We're not looking at individual stocks, and this is for the last 10 years. Look at the difference. Here are just the top 50% of industries. Here is the S&P 500 in that dark red, and in orange below it is the bottom 50% of industries. Very interesting. So I always choose stocks that are in the top 50% of industries, and then I find the absolute best stocks within those industries. And while I mentioned that, I was planning on showing you some screening and back testing results. I'm not finished yet, so that'll probably be next week. Some absolutely fascinating things are rising to the top that I'll show you next week. We do a pretty darn good job picking stocks. Most of our stocks work and make us money. I'm always trying to find, how can we make more money? How can we have it faster? How can we have the highest quality? And this is just one of numerous aspects that goes into stock selection. But I'm doing a huge amount of research, and I will hopefully show that to you next week. For those of you who are using the 100% downside protected ETFs, This was kind of interesting. Now, the first week of August of this year, just recently, was just a huge down week. And what this company did, this was Calamos, what they did is they looked at all of their different S&P equivalent downside protected ETFs. And during that week, the S&P was down a little bit over 6%. And those 100% downside protected were down about 1% or a half of 1%. Now, remember, on the maturity date, they can't be down, that you have a 100% guarantee. But just to show you, even during a significant time of volatility, and granted, we're looking at that 1 week, that's a huge disparity, which is interesting. Here was the NASDAQ during that 1 week, was down 7.5%, and their NASDAQ tied 100% protected ETF was down 1%. Very interesting. And again, these are guaranteed on the day of maturity, but in the meantime, they can fluctuate a little bit, but they don't fluctuate very much on the downside. And this is the Russell 2000, which I really don't use. The Russell was down 9.5%, and its respective protected ETF was down 1.5%. But for protected ETFs, I only use NASDAQ and S&P. I found this very interesting. This should be comforting to those folks who use these types of investments, because even when we have really significant downdrafts, and remember, this is 1 week, you don't see your investments go down very much in this type of an investment. So most important thing to know is, where's the market going? Is it up or down? Everything follows from there. Here is our matrix updated through today, and you will see that we were in this rash of red, and everything has pretty much, almost everything has turned back to green. On the daily, we are in a green situation, which is great. And that just happened today. On the weekly, we're in an up situation, and that just happened today. On our moving averages, this is yellow, but it's not really a pullback. It's just that we haven't gone over the 50 yet, so I've left that in yellow, but things are looking really good there. Our bear market avoidance indicator has never left the green, so that has not been an issue. And let's go back to the VIX. The VIX, I usually update what its value is once a week. But here was the beginning of August that we were just talking about, and the VIX spiked to over 20, and the next day almost 40. And then ever since then, I've been tracking it on a daily basis just so I could show you. Last Friday, it was still above 20. On Monday of this week, it was still above 20. But on Tuesday, it went to 18, and then 16, and then 15, and then 14.75. So I looked back in history because I was curious. This seemed very rapid. And what I found was, for a 1 week, the degree to which the VIX fell or relaxed from its highs down to where it is was the fastest retraction in the VIX rate in history. So if you feel like, wow, what has happened the first couple of weeks of this month of August, it's been just wild. We were down huge for 1 week, up huge for 1 week. This is the fastest that has happened in history. I found that quite fascinating. So this, just let me take a moment. There is an ETF that I've just recently found that I'm planning to add to accounts, both Group 1 and Group 2. Oh, by the way, Group 1, we had purchased some stocks in here, and those stocks have done very, very well. We didn't purchase any stocks for Group 2 because we were still in a down situation. That has changed. So now Group 2 will be added as I add stocks and ETFs and such. But I don't add to Group 2 until we're in the green. This is an ETF. It's a momentum-based ETF that works on the S&P 500. I'm about to add this, but I just want to show you some stats on this, just some of the research that I do. Morningstar, some people love their rating, some people don't, but I'll just point out that their overall rating is 5-star. That's as high as they go. Their 3-year rating is 5-star. Their 5-year rating is 5-star. This is what I really pay attention to. Their historical return is above average and their historical risk is below average. I love that. That's exactly what I'm always looking for. And then if I go to one other area of research that I'll just show you very quickly, let's see, risk. When I look at these stats, and you may or may not know what some of these are, but the Sharpe ratio is positive, trainer ratio is very strong, information ratio is excellent. The alpha, which is excess return over its equivalent index, is outstanding. And this is one of the most important things I look at. In quarters where the returns for the S&P are up, this investment generally gets about 3% more than the S&P 500. That's what that means, 103%. But when the markets are going down, and this is quarter by quarter, this investment goes down 87% of the total. So about 13% less risk than the overall market. So this is just another one that I am probably going to be adding very soon, but I'm waiting, and I'll show you what I'm waiting for. Before we get to the S&P, here we are on that ETF that I have been tracking. All of the technicals are starting to look good. Here was the first week, basically, of August. You see that huge downdraft? Second week of August, that huge. I mean, this is just like the clearest V-shaped bottom that I've ever seen. Bottoms generally don't look like that. They kind of go sideways for a while. But this is looking really good. This has been very aggressive, and I'd like to see a little bit of a pullback before I go into that. So that's what I'm waiting for. And you'll see that again on the S&P. Here's the S&P 500 on a daily. Again, first week of August, second week of August, nothing goes straight up. I would suspect we're going to have a little bit of a pullback. If you see this little box that I put in there, that's because this is a gap. This is a gap. We've talked about gaps with stocks. Here is a gap from one day to the next. And you can see that that gap was, we call that being filled, okay? Here was a down gap, and here it was filled. Gaps get filled. I don't know if it's 100% of the time, but it's way more than 90% of the time. We've got an up gap here, and I suspect that that will be filled soon, probably sometime next week. So I'd love to see prices roll back over, fill that gap before they start to rally again. So that's what I'm waiting for. I try not to buy when just day after day after day after day we have these strong markets, because nothing lasts forever. There's always a bit of a pullback, and gaps generally do get closed. So that's what I'm waiting for. But I like what I'm seeing. The price is over that 50-day, the gold 50-day moving average. The short term, the 8-day, has crossed back above the 20. That's excellent. It won't take much for that 8-day to cross above the 50 very soon. And then we really need the 20 to cross back above the 50 before we're in a perfect bull market. We're not in a perfect bull market yet, but we're in what looks like a developing perfect. We'll see. You never know from day to day. So again, I tried to keep that short. Very happy with this rebound. It was almost too good to be true. Fastest in history. But I don't want to take our eye off the ball. We're still in August, September, October, which are the three highest VIX, highest fear, highest volatility months of the year. There's a lot of uncertainty going on in the Middle East right now with Iran and Israel, and obviously there's some uncertainty with the presidential election, but it is starting to look a little bit clearer. At least we know who our nominees are for both parties, but a lot of uncertainty there. So we're going to start rebuilding portfolios, but again, don't be surprised if during these 3 months we go into stocks and then have to come out of stocks. And what I'm doing, let me just show you for group one. We went into this stock, THC. We went into it right there, which was kind of perfect. And look at what it has done. That red line is now above the blue line. The blue line is where we entered that position. And the red line, which is our stop, started down here. But each day I keep raising it if the price keeps going up. And now the stop is above the entry. So barring a gap or something really weird, we can't lose any more than we put into it. And as it continues to rise, I will continue to raise the stop, especially during these 3 months. I am looser with stops during great months, but during this time, I'm tighter with stops. We also added a company called UHS, which is Universal Health Systems. The stop has been raised, but it is still below the entry point. But we bought it right there just a couple days ago. It's starting to do exactly what we had hoped and what we had expected that it will do. So as it continues to move up, we'll continue to raise our stop. And the goal is always for our stop to be above our entry point, and then we just keep rising from there. I'm always looking at stocks that we've been in the past. I'm always looking at things like NVIDIA, CrowdStrike, SMCI. I've got lists and lists and lists of stocks and that we were stopped out of, and we'll go back in if the technicals look really good. But there's also nothing wrong with finding new companies that are really showing up on our screens, which I'm going to show you next week. I hate chasing things that have already been up 100, 200%. Could it go up further? Yeah, sure. And will I add them? Yeah, absolutely. But sometimes I like to find the undiscovered. This was doing nothing. It was just going sideways, had a big pop on earnings, waited for a pullback and a little bit of a correction, and went in right there as the stock cleared that previous high. That's called a breakout, and it's doing okay for us. Did a very similar thing with THC. It had a big, strong run up. I had a feeling that that gap was going to get closed. It got closed. And then as it started to rebound, which I always wait for, that's where we went in, and it's done well so far. So that's the story. Lots going on, lots of work being done behind the scenes, an enormous amount of research, which I love to do, and that's what helps us find these hidden gems. So I will show you more of that next week. Have a wonderful weekend. Have a wonderful week. I'm always here. Shoot me an email, give me a call, whatever you need. I'm always here for you, and we will survive this next 2.5 months until we get into the stronger period of the year, which starts the fourth week of October, and we will be absolutely ready to take full advantage of that. But even in the meantime, we're going to continue to rebuild our portfolios. Okay, that's a story. Talk to you next week. Bye-bye.